Welcome to Raising the Curve, a podcast designed to teach you everything that you need to know to be better with your money. Come and learn alongside me, Sophie, a total beginner from the finance expert, Victoria Harris.
So I've asked all of the questions you wish you could so that finance, investing and growing your wealth actually makes sense.
Yes, it's expert education, but that we promise will not be boring.
And in the wise words of Cher,
my mom said to me, you know, sweetheart, one day you should settle down and marry a rich man. And I said, Mom, I am a rich man.
Come and talk and learn and laugh with us because together we really can raise the curve. Gosh, we are very proud to be partnering with Trade Me for this property mini-series. So for anyone that has followed the curve for a little while, I have spoken about my property buying journey quite a bit to the point where people are like, what is happening? What is taking so long? We are doing a podcast mini-series in partnership with Trade Me Property. And whilst I'm not quite there yet on the actual purchase part, what I have been doing in the meantime is dream scrolling. And dream scrolling being looking through all of the amazing properties that are available on Trade Me Property, because there are more properties there than there are anywhere else. And so this has been quite exciting for me. You know, I've been looking at, let's be honest, things are quite out of my budget right now, but to see what's available from like seaside escapes, which, you know, one day I'll get there, to like amazing properties that are available in the CBD or centres of towns in New Zealand, it really is the best place to see absolutely all of my potential options. So if you are in a position where you're thinking, do you know what? I'd love to buy property, or I'm interested in what's happening in the property market and I want to know what things are going for, then Trade Me is the place to look. So thank you so much to Trade Me Property for empowering this conversation. And why not open endless doors with Trade Me Property? You can download the app on iOS or jump on your web browser, have a good old dream scroll. And if you see any good ones, please flick them my way.
got a bit of an update, don't you, Sarah?
I know. I've got such an exciting update. And do you know what's actually hilarious about this is that I think the social media post that we put out,
that was so cute.
it was so cute, but I think everyone thinks I've bought a house.
I know. I did think, I was like, no, she's just got pre-approval.
I was like, oh no. I was in a yoga class this morning and this girl comes up and goes, congrats on buying a house.
You're like, read the fine print. Read the fine print.
Like, shit.
But it is, I don't know, it is, pre-approval is the kind of, I guess, biggest steps to overcome, like the biggest milestone. Then once you have that, it's like, cool, now I can go shopping. Do you know what I mean? Like it's the bank saying, yes, you're financially viable for this amount. And then you're like, oh my God, now I can go shopping. But then there is a whole nother process now, but a lot of the heavy lifting's been done.
Well, I think it's almost like you've applied for your credit card. You've been given the limit, but you haven't spent the money.
Yeah. So it's like you've announced you're pregnant. Everyone's like, oh my God, amazing. You haven't actually had the baby yet. Yeah.
Yes.
Yeah.
So for anyone that's missed it, by the way, so we put a video out on social media, basically telling close friends, family, grandma, that kind of thing.
Like a gender reveal, pretty much.
I was kind of just like, do you know what? As someone who is in a different stage of life, let's just say, than a lot of my friends, and the amount of messages I got from that first property episode we did that was about like me having my big old breakdown.
Yeah.
About feeling like I'm getting left behind and just like, you know, frustration around the house buying process.
Yeah.
The amount of people who sent me messages, emails, like
so
DMs
beautiful.
on Instagram.
Yeah.
And it was also really empowering stuff. Like lots of content of like older women speaking to younger women being like, don't get swept up and blah, 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 blah.
A lot of people being like, don't compare yourself to others in terms of your progress or success in life. And a lot of people being like, don't worry, I was in that position, but contact this person, they helped me. You know, like it was a lot of, don't worry, don't give up.
It was
it was really nice. One thing about that post, I was like, if you watched it on silent, you would honestly think you were pregnant, or it was like.
Do you mean the crying one or the gender reveal?
The gender reveal.
Oh, 100%.
Make sure you watch it with the sound up because
But in saying that, what I was almost trying to do with that is I think since we recorded that first episode a few weeks ago and since all of these messages of like support have come in and really helped me honestly reframe where I'm at in life.
Yeah.
Which is I'm working to my own timeline. I'm doing things differently. Yes, I'm focusing on my business right now. And no, I'm not having 17 children and I don't have a dog and I don't have a house, but I'm building something else really amazing.
Yeah.
And someone said to me, actually, this was one of our advisors who is amazing. And she was just saying, like, look at the percentage of people in the world that have babies or get married.
Yeah.
Look at the percentages of people in the world that build a business. Like,
And then look at the percentage that a woman.
yeah,
that
and
build
she,
a business.
and she was just
Yeah.
like, remember, you're like a 1% right now.
Yeah.
And like, don't dim that because you're comparing what you don't have with what everyone else around you has.
And it's honestly like the grass always looks greener. Do you know what I mean? Like you look at people with things that you want and thinking that, oh my God, I want that too. They'll look at you and be like, oh my God, I want that. Look, it's just.
You're never happy with what
Yeah.
you've got. You always look around. Yeah, I totally agree. The grass is always greener.
I remember that when I turned 30, I was like, oh my gosh, I'm in my 30s. Oh my God, my life. Like it was like a big.
The 30s have been
Yeah.
so much better than my
Oh,
20s. I'm
yeah.
like, and everyone says the 40s are even better than the 30s. So I'm like, do you know what? I
Bring
think
it
it just
on.
gets
Yeah.
better with age is what I've decided. It's really made me think about things in the last few weeks where I've thought, okay, yeah, I'm not doing what a lot of people my age are, or I'm not at the same level as what a lot of people are. But I want to be proud of my wins. And so
Yeah.
when I got pre-approval, I thought, you know what? Like my friends aren't going to be coming to an engagement party or a wedding or a baby shower in honestly 5+ years. So if ever, so with that, I'm going to celebrate something that is like the biggest milestone for me. Like
Yeah.
I was driving home when I just found out. And like I get emotional at the best of times, but I get really like emotional on behalf of feeling proud of other people. Like I often
Yeah,
think
yeah.
about things that you've done
Yeah.
or friends of mine, and I'm like filled with pride and like so proud. And I was thinking about the fact that I'd got pre-approval and I was like feeling the same thing for myself,
Yeah.
which I haven't in so long to be like,
yeah.
to really look at something I've done and feel that same pride that I have for my friends, for myself. And I was like, I really don't think that I would have got to that place had it not been for so many people in our community
Yeah.
sending in messages being like, hey, I was thinking about this. I wanted to send you this to have a look at. So I just want to say thank you to everyone because and also it felt stupid putting that out in socials in a way where I was like, am I being really self-indulgent here? But actually,
Screw it.
oh God,
Yeah.
we've got to celebrate this small
Totally.
stuff. And this
Yeah.
isn't small, this is huge for me.
Yeah.
And I think, so for anyone who is either struggling to get pre-approval or has no idea like the hoops that you have to jump through and how to get mortgage ready, that's definitely something we're going to look at doing in the coming months, because I think if I'd known a lot of the stuff that I know now, I could have prepared a lot better.
Yes.
So we're going to definitely keep doing, like beyond this Trade Me Property mini-series, we definitely are going to do some more property content because, yeah, it's just something so many Kiwis are interested in.
And it's such a steep learning curve. Like, honestly.
Oh my gosh.
Like the jargon involved with like lawyers and mortgage broker. Yeah. Banks.
I actually think we should get a lawyer on
Ugh.
because I think doing almost like a refresh of the property law, like whose is what.
Yeah.
If you buy with someone, what you need to, like, I think it's a really
Is
important
this
step.
Soph just wanting to do some
Free
research?
legal advice. So
So
tell
I think
me.
it'd be a really good time to get someone on who's an interior designer who can really come and like tell us how to use spaces right. Like I see where this is going. Yeah,
So
yeah.
true. So what we're going to need as well is to do a full company workshop on
Yeah,
the
yeah.
best way to renovate a home.
All of a sudden we're like a
So
property
funny.
podcast.
I mean, it's not a no.
I need someone on like for tax between countries as well. Like, I mean, it'll be quite good. But also, you promised us a house party, a housewarming.
Oh my God,
Yeah.
yes.
So when we have the next gender reveal celebration, which is the actual purchase of the house.
Yeah. I
We're
love that
popping
you
some
say it
champagne.
like it's happening, because I think I still have imposter syndrome. Like I'm
Oh, you're like close to the finish line. You've started the race, the gun's gone.
I hate the gun. That's always
You're
so
halfway on.
scary.
It's like you're supposed to just go,
Full
but
stop,
you're
full
kind of like, oh shit, oh that was.
So shocked that I can't run.
I know. I always used to do that in swimming sports, like just kind of go before the gun because you'd be a bit scared, and then it'd be like, oh, everyone
also-
back up on the pew, whatever you call it. Yeah.
But when you're wearing like a cap and goggles, you're really muffling your hearing. So I'm
Yeah.
not surprised that you had a false start.
Yes. Yeah. Also, just wanted to get ahead.
Get over and done with.
It's cheating.
Oh God. So anyway, look, it's been a what's a new word for journey? I can't use the word journey. I hate it.
It's been
a
experience.
It's been an experience.
Just want to experience things. Kylie Jenner.
I think you should experience it. You always say I want to experience things, but I don't think you actually want to experience things because you would experience it if you wanted to experience things.
But just for anyone so basically haven't bought the house yet, however, do have pre-approval, which means I'm ready to go shopping. So now I'm at the point where I'm thinking, right, I've been pre-approved. So my pre-approval, I'm doing it with my friend. So he is someone I live with in London. And
Is he just kind of trusting you to buy the house, that he's not going to look at it?
Oh, God, no. Oh, do you mean me doing all the research?
Well, just like he's obviously not going to see the house before he buys.
Yeah. Well, I think our approach, because we live overseas, we aren't able to do first home. So the way that we have to approach this property purchasing journey is really different to a lot of people.
Investment.
So we have to have our investment blinkers on. So for him, he's kind of like, well, it's not an emotional purchase.
Yes.
He's never going to live in it. I mean, we're working on it very much together. It's not a, and actually this really epic guy called Pete West, who's kind of come out of the woodwork from his wife listened to the podcast, and he's a real expert in buying investment properties and doing them up and selling them on. Like, he's awesome. And he's been like, hey, I'm really happy to give you a hand. So I think and he's teaching me so much about property right now. Like we're doing theory sessions where like, honestly, he's awesome. And he's like giving me this almost like property schooling experience. And I actually am going to speak to him about like, how can we bring this to the curve? Like, is there a way that we can do something where, because this information he's teaching me is like game changer stuff.
Yeah.
And will be so helpful for so many people who maybe can't buy their first home or want to invest differently.
Because also a lot of our audience already has a home. So it's like, I'd be really keen to know, if I had already owned a house, like when and what should I look for in terms of like starting the journey for an investment property? Do you know what I mean?
Totally
Like
different.
at what point how much equity do I need, or do I need to have X amount of income, and like what should I be looking for? Should it be when the property market's down, or when you're like, it's such a different mindset. You're so right. It's like, how do I make money rather than I like this property, I want to live in it, I can see myself in there with a family, whatever it is. Yeah, it's way less emotional.
And that's kind of, I guess, my thinking at the moment, which is what we wanted this podcast episode to be about, is really speaking about the difference in buying a home to buying an investment property. Because also a lot of our audience live overseas. There's a lot of people that are in the UK or the US or
Australia,
like all over. And a lot of those are Kiwis, as much as we like to think there's some internationals. I mean, I'm sure there are some, but a lot of it is Kiwis abroad, right? So within that, there's people who can't buy their first home, but are probably thinking and probably never thought they could buy a property in New Zealand or
I think that's the thing.
Property.
It's like the creativeness of like, oh, I don't have enough for a deposit, or like, have you thought about joining forces with a friend and getting, okay, if you haven't and you want to go down that route, this is what you need to think about. Like it's not as black and white sometimes as you think.
Yes, and that's such a good point, Vic, because when we had our Trade Me property event, which was last week, if you haven't listened to that episode, we did it with Emily, who's like the Trade Me property audience director, and she's been working at Trade Me for like 6 years. She's amazing, and actually I've known her for a long time, but we got her on and she spoke with us at this event, and we spoke a lot about the idea of investment versus anyway, it's a great episode. We recorded it like a live podcast, so if you haven't listened, you can. It's called Buying Property, What You Need to Know. So if you would like to listen to that, definitely do. But yes, so on the fact that I've had to be really creative with how I'm buying property, I think that it's started to wake a lot of people up to the idea that they can do it differently. Because when we were at this event, this woman came up to us. Actually, she asked a question so you'll probably hear it in the podcast, but she was basically saying, she's 33, she's in a position where she's got a really decent deposit. She knows where she wants to live. Like she kind of knows all the criteria that she needs. She almost just needs a partner in crime, like someone to do it with her.
Yeah.
And when you've got a lot of friends that are in relationships or family that don't have spare money or like whatever the situation is, like it made us think it would be so fun to help match people up if they want to buy property, but they need to find a person to do it with, like almost speed dating.
Like a Tinder
Yeah.
for property.
Yeah. I
And
mean,
your criteria.
totally. And it's like, what's your lending ability? Like, are
Yeah.
you full-time? Do you want to live in it or not? You know, like really tick
Want to
off.
pre-approve with me?
Yeah. Want to go on a
Want to get pre-approval together?
huge. But it is kind of just like thinking about it differently because, you know, for you, when you bought property, it was the first time was very much like a lifestyle purchase.
Yes. Yeah.
For me, I don't have the option to do that because I can't afford to live in a place that I want to live in London. So for me, it's like also really exciting because the whole of New Zealand is my oyster, you know?
New Zealand is your
Because
oyster.
I can buy an investment property anywhere. It doesn't have to be somewhere I'd want to live.
Yeah.
But there's certain things you need to know what to look for. Anyway, we're definitely going to take you on the learning process with me because there's a lot that we could, I think, pass on from what I'm learning. But today, I think it would be really cool to just start with like talking about the pros and cons of both, because there might be people listening to this that are like, I don't actually know which approach is right for me. Because even if you are in New Zealand, you can still do an investment property. You don't have to do, as you say,
totally.
someone might, whether it's your first, second, third.
There's like an active approach to investing in property, which is when you get in there, you buy it, you renovate it, you sell it. Like you can't, almost like flipping houses, and you add value that way. And then there's just a passive approach where you're just focused on really the kind of the increase in price over time. You're more of a bit of a buy and hold strategy, which tends to be more residential or like your own home. And then active is more the investment property side of things. Yeah.
If you want to learn about flipping, we did an episode called Buy, Renovate, Sell, How to Flip a Property with Alex Harper a couple of weeks ago. And that was really cool because that's a totally different approach.
Yeah.
There's also a hybrid of the two. You could buy, add value and still hold it.
Yeah, and then
You don't
sell
have
it,
to
and
flip
then-
it.
yeah.
You could still hold it for 10 years.
A lot of people do. Yeah, you move in and then you might have a few extra kids. You got to add an extra extension, add value that way, or you realize actually, let's convert this bedroom into another bathroom or something and add
But
value that
even
way.
if you're doing it where you're not living in it, again, an investment property, you
totally,
you
yeah.
can buy something.
You just
You
hold it.
could add a lick of paint here. You could, you
a
know,
lick of paint.
jazz up the carpet. You could, you know, there's ways that you could do that before you then rent it out. So
Yeah.
it's just like being aware of the big puzzle. So
Yeah.
to decide what kind of property approach is right for you, where you're at, whether you own a house, you don't, you're looking at investment properties, you're looking at your first home, understanding the lay of the land in detail is really important. And this
Yeah.
is something that I went all over the show with, trying to decide between the UK or New Zealand. You know how you said to me, well, why wouldn't you just invest if you want to live in it in the UK?
Yeah.
Understanding what returns you see in different markets can really help because at the end of the day, yes, some people want to buy a home to live in it, but at the other end of the spectrum is people that just want to make money through the property market. And
Yeah.
that's also totally fine. So can we break down the difference between, let's just use our top 3 countries in terms of listenership, which is
Yeah.
New Zealand, Australia, and the UK.
Yeah, so we did kind of touch on the returns in New Zealand property market in the Trade Me live event podcast, but the average house price in New Zealand is about 900,000 New Zealand dollars. So that means that there's ones.
That's really high.
Yeah, so it means there's ones that are like obviously like 10 million, 20 million, but it's like the median is 900,000. So there's some that are super cheap, some that are super expensive, but that's the average. And over the last 30 years, the property market in New Zealand has returned just over 7% return per year on average. So remember the last 30 years, we talk about the stock market, it's about 10% return on average. So if we looked at like this kind of risk and return spectrum, we've got cash, which is low risk but low return. Then you've got bonds, then you've got property, then you've got shares. And that's exactly why, because over 30 years, shares has done better than property.
Which is such a mind
Yeah.
blow for me because if I think about, I remember when we first started the curve and we were talking about property and investing in stocks or property, it took me such a long time to get my head around the idea that, because when you think of property and the returns in property, you just assume it's better than
Yeah.
everything because it's what everyone talks about. But actually on average, the return is lower.
Well, this is just the change in house prices. So it doesn't take into account leverage. So that's like when you borrow money and you therefore get a mortgage, your returns are magnified. So what might be 7% on average, for you, it might be 12 or 15% because you've borrowed money. So it kind of, in the simplest form, just think of it like it just kind of propels those returns.
But if we were to just think about that for a second.
And so it's hard to know what everyone's borrowing rate is. So it's hard to take all of that into account.
Because
so they just do the house price change. Yeah.
Because if you've borrowed 2 million and you're getting 7% on 2 million, you're actually technically probably getting like 50% return. No, maybe not that high, but it's a lot higher than someone that's potentially. It's a lot higher than someone that's loaned less, but is still following the same average house price increase per year of 7% because the amount they've borrowed is massively magnifying that 7% over more amounts of money, basically. It's hard to think
there's
about.
A return on your equity, and there's a house price return, which includes, like, if you think of the house itself as like a circle, a portion of that circle is debt and a portion of that is equity. And as that circle gets bigger over time, so that's like the percentage return, that's the overall circle, the change in the overall circle, the percentage change of the overall circle size. Whereas if you're just looking at the equity portion of that circle, that return would be much greater because the debt doesn't really change. The percentage return of debt doesn't change. So, if you borrow 100 grand, you still have to pay back 100 grand in 5 years' time, whereas hopefully house prices have gone up. So your return on the equity, so that just means like your money that you've put in is much greater. Does that make sense?
Can I repeat this back to you? Because I think I'm understanding you, but I just want to repeat it back. So because when you borrow money from the bank, the amount that you have to give back is the same. That's not growing. So like you're not taking more and more debt unless you're borrowing to renovate or whatever. So you're getting a total return on a larger amount of money. So it's just the idea that, let's say you have a $500,000 house. 20% of that is your equity or your deposit.
Yeah.
The rest of the 80% has been bought by debt. So you only have to pay the bank back what you've borrowed.
Yep.
That number doesn't change, but because
the dollar value doesn't change.
The dollar value. So say I borrow 500,000 from the bank,
and you've put in 100,000, so you've got a $600,000 house you're buying. Yeah.
Then I only, at the end of the time that I decide to sell that house, I still only have to give the bank back 500.
Yeah.
But because that 500 has been sitting in an asset that is growing on average by 7%, the return on that money I get to keep, as well as the return on my equity.
Yeah.
So it's like the amount that you're getting is actually so much more than 7% because it's almost like you're using someone else's money to compound
your own.
Yeah.
Yeah.
Whereas if I'd only invested, let's say I'd invested
let's say you didn't even borrow any money, then your return would have been 7%.
7%.
Yeah.
Yes.
Yeah. But it's 7% on a larger number. Whereas you're putting in a small amount and that's growing. Yeah.
I reckon the best way to think about it, even though on average it's a 7% return, which doesn't actually sound like a lot compared to the stock market that's done 10%, the reason that property does so much better is because it's not like you're just getting 7% on your equity or your deposit.
Yeah.
You're getting 7% on money you didn't have to start with.
Yeah.
So it's like that's why it's so much greater.
Yeah, so there's quite a few numbers floating around, but let's so if you had a house that you purchased for $500,000, that is the house price, and you borrowed $400,000, you deposited equity or what you could afford to pay out of your pocket is $100,000. So $100,000 equity, $400,000 in debt, which is borrowed from the bank. That increases on average 7% per year over the next 5 years. The value of that house is going to be just over $700,000
over 5 years.
So it's gone from $500,000 to $700,000. You have to pay back the bank that $400,000. So the difference is
it like a 35% increase then?
So you have to pay back the back bank 400,000. So the difference is
300,000.
You put in 100,000, you get
200
back.
What is that then?
So that's a 200% increase. Even though the market's only gone up 7%, the house prices have gone up 7%.
God, that took us a while to get there, but that is huge.
Yeah. Well, if you put in 100,000, you get 200,000 back.
No, you get 200,000 on top of your 100,000.
Yes, sorry.
So you actually are getting 300,000 at the end, even though you only put 100,000 in at the start.
Yeah.
200% return.
Yeah. So this is why it's like
it's
leverage, and leverage can do that in the stock market as well. It can be exactly any asset. If you are like, look, there's a stock I want to buy, and it's $500 for a share, but I can only afford to put in $100. I need to borrow the 400. The exact same result would happen if the share price went up by 7%. But that's very risky because, that's just a super risky.
But do you know what's so interesting is that the more that I've learned about investing, and I know that that's true, I know that it is really risky to go and invest in the stock market with money that you don't have. I understand that, but it's equally as risky to borrow money and invest in property.
No.
You don't think?
Nah. Investing in shares is a lot more risky because the movements of share prices move up and down way more than property moves up and down. So you could wake up tomorrow and the stock that you invested in be down 20% easily. That does not really happen with property.
Yeah, but I guess my point is if I'm investing for a long period of time, which I am with all of the things I invest in, property and stocks.
Yeah.
Because I'm not planning
You'd want to
taking...
make it into an ETF. You'd want to invest in an ETF. You wouldn't want to put that all into Tesla and be
God,
like...
no. But what I'm saying is if I was doubling down and investing in say, an ETF, I'd feel just as confident doing that as I would borrowing money to invest in property. Is that am I just absolutely blind to risk?
A lot of people do with shares, but it's like very experienced investors and they've got strict, like what we call kind of almost cut-offs where it's like, okay, if the share price falls 10%, I've got an automatic sell order to sell because I don't want that going down to, because leverage works in the opposite way, which is what we forget about. That could be negative 200%.
Oh, holy shit balls.
Yeah.
But I guess what I'm saying though is if I was to do that, I would only do it in something like the ETF.
Something that's very diversified. You've kind of got the strategy that's...
Because really, if you think about it, if you were borrowing like 300 grand, and by the way, I know we're not... Honestly, if we could zoom back 4 years, can you imagine me ever saying this? But if I had more money to invest, I would put more money into the stock market.
Yeah.
So what's the difference? It's in my head, I feel just as...
confident.
Yeah. And both asset classes, I understand enough to, I'm not saying I'm going to go get a loan and invest it in the stock market, but the point is the more money you can invest, the more money you can make. And so
there's also borrowing that money is the hard thing.
True, because then also you
go to the bank and go, hey, can I borrow 400,000 to invest in the stock market? They're going to be like, hell no.
Because also there's the question of like the interest you have to pay back on, say, a personal loan. Let's say you loaned money to then invest in the stock market.
It's
if
like 20%
there's a year
or like
that the stock market is down, you still have to pay that interest back. So I understand like in that way. But anyway, we've gone slightly off track here.
So in terms of property market performance, more recently, so over the last 30 years, New Zealand has delivered about just over 7% per year on average. But more recently, that's slightly below 7%. So in the last kind of 5 years, stock market hasn't done very well.
Stock market or property market?
Sorry, property market hasn't done very well.
So lucky I'm paying such close attention.
Gosh. But historically, we like to look at long-term averages here, all about the long term. And in Australia, the average house price is 985,000 Australian dollars, so nearly $1 million. But its property market hasn't done as well as New Zealand.
Is it not?
No.
What's the average increase?
It's just about 5.7% per year over the last 30 years. So,
and what about the UK?
And the UK is about the same as Australia, so about 6%.
It's still really good though.
That is still really good, but yeah, there's so many reasons why New Zealand is an attractive place to live and why our property market has done so well.
I honestly thought it would be more. I thought that the percentage average yearly increase would actually be a lot more than 7 versus 5.9 or whatever it is.
Yeah.
It's not that big a difference.
No, but compounded over 30 years, adds up.
True. But like it's the same premise though. You borrow money to leverage, to invest, and that 5% ends up being, a lot more because of the leverage.
Yes.
So it's like really everywhere in the world, property is an amazing place to make returns.
Yeah. It's just, it can actually be out of reach for a lot of people because of the deposit that you need.
Why? It's so chill.
It's so chill. Getting
So
pre-approval
easy.
is so easy.
I haven't seen my whole fucking life to try and get enough money.
Yeah. So, yeah, if you are in a position to buy property, it is a great way to diversify your assets and your wealth and not just put it all in shares or all in the bank. It is a great way to not only make a good return, but actually diversify out of investing in other things.
Interestingly, what you just said in terms of diversifying, for me, I think what I'm thinking is, because I'm just such a stock market girly, I love the stock market. I really enjoy investing in it. I love knowing what I'm investing in. I feel excited by looking at companies. And honestly, the Investing Club has sparked something inside of me that's just it's so fun.
Unleashed the dragon.
Yeah, the dragon is well and truly loose out there in the Hogwarts grounds, I am just really into it. And I think that I don't want to invest so much of my money that's the only asset class I can be invested in. I really want to be able to continue to invest in the stock market. I want to be, I think that I understand the premise of investing more because you can borrow more because you then return blah, blah, blah.
Yeah.
But for me right now, I want to stay active with my investing in stocks as well as property. And I know that if I stretch myself too much, that will be totally out of reach for me.
Yeah.
It feels safer to be doing, a huge part of my investments in property, but not 100%.
No. Yeah. You've got a good balance.
Yeah.
Yeah. Because they do work and they do move in different ways as well. There's things that impact the property market that don't impact the stock market and vice versa. So, yeah, the more diversified you can be, the better. But obviously that's not possible for a lot of people. So,
but also I think where I'm lucky is that because my friend is in a similar position where he
I thought you were talking about me. It's like, 'cause my friend is.
No, but because he's in a similar position where we both have a similar amount of a deposit.
Yes.
I would need almost double what I am currently, I'm putting 110,000 New Zealand towards this potential house property buying situation. And so is he. If I wanted to do it by myself, it just wouldn't work. And so I think it's unfortunate that it makes a lot of sense to buy property with somebody else because it's less scary. You get to go in on the loan with someone, the whole process you're doing with it feels like a joint burden in a way.
Yeah, joint risk. You're sharing the risk. You're sharing the exciting possibility of it doing well. There's a lot of you're sharing the unknown as well.
Yeah.
It's not you're diving into something. I don't know. It's kind of like starting a business.
No, it is.
Yeah.
It totally is. But I think with that, it means that I also only need half the amount of money. So whether it's buying with a partner or it's buying with a friend or a parent or a stranger, that feels better for me than it does to be 100% in property by myself. It feels, why are you laughing?
No, I'm just imagine if you became a
Property
romantic partner, that'd be easy.
Do you know what is so funny? Because someone said that to me. They were like, okay, but have you ever been romantically involved? And I was like, why are you asking that? No, we haven't.
It's quite easy to combine the
Do you know what it did make me think?
They're already combined.
It made me think if you are investing, if you have this sort of stuff in place when you go into a relationship. So for example, you approach your romantic relationship just like you would a business deal.
Yeah.
The chance of things going wrong, it sucks still because your relationship would break down, but you have all of your stuff sorted.
Yes.
So I think going into this for me with the same mindset of this is how I should enter any romantic relationship because it's a business partnership.
It is. It's an asset that has got monetary value and there should be a contract involved. I totally agree.
No, 100%. But sorry, what I mean is yes, of course, with the current situation of buying a house with a friend, you need that.
Yeah.
But it's bigger than that. It's more made me think if I was to go be in a relationship with somebody where I was, coming in the same way that I am with this house buying situation, with my own assets, my own money, my own blah, blah, blah. If you have those conversations about like contracts and putting things in place and being really clear about whose is what, you're mitigating the potential risk of the financial fallout as well as a romantic fallout, because the romantic fallout, like awful heartbreaking shit,
but if you've got the financial side sorted,
it feels less stressful.
Way less stressful.
Like my heart can handle it. Do you know what I mean? If I've got the rest of it sorted, sweet.
Yeah. Whereas if you're like, give them everything.
Exactly. It's kind of like, oh my God, everything's turning to shit. Now I have to do that.
It's like, oh no, actually, smart me 5 years ago made sure that I dotted my I's and crossed my T's. So now I can just lean into the emotional side of the breakup, not the financial.
Exactly, because that's all sorted. And like someone said the other day, they were like, actually, no, it was, going right back to the beginning of this episode, it was one of the things that someone sent me in response to my big cry on the podcast.
Yeah.
It was like this woman who's in her 50s, I almost should like play it or share it on Instagram, but she was basically saying, you know, marriages end in divorce 60%. She was like, I wouldn't enter a business relationship if I thought it was going to had a 60% chance of failing. Yeah. You know, like, so why the hell would you not put shit in place?
Or if you did, if you knew that statistic, you'd be like, okay, well, there's 60% chance this is going to turn to shit in a business sense.
Yeah.
Let's make sure we've got everything in place, because the majority of times end up in,
Yeah.
I think when we talk about property prices, I think the key thing is with any investment, prices go up when there is an increased demand for that, but like limited supply. So whenever you want to invest in something, it's like you want to invest in something that everyone wants, but there's not enough of. And it's the same with property. And so that's why people want to buy, you know, the best house on the worst street. No, the worst house on the best street.
You know, it's the second one.
Is it the second one? Sorry for that bad advice.
Can I tell you one of my favorite things about you is that face when you're kind of like, you've said something and then you're like,
I'm like, oh God.
I'm having a brain.
It's like, oh no, I know that's wrong. Yeah. So you want to buy the best house on the
shittest house on the best street.
The shittest house on the best.
That's if you're flipping. If you're flipping a house, that's what Alex said. She was like, you buy the worst house on the best street because everyone wants to be in that street and there's only a certain amount of...
But that's the thing. It's like, because everyone wants that. Everyone wants that house eventually. So it's like everyone wants to live there or the street. Yeah. So it's things like, and this is why New Zealand property has done so well, is because if we just looked at the demand side of the equation, you know, we've got a very, very accommodating or supportive tax structure when it comes to property. We're one of the only countries in the world that doesn't have capital gains tax on property, on your first home.
Do you think that'll come into play?
Good luck to the politician that tries. True. Vote for me. I'm going to bring in capital gains tax.
But could they do that when they're in power?
Yeah, but they're not going to get voted in again. So it's like...
What if they did on their last hurrah?
Yeah,
everyone was like, put that capital gains tax in.
Yeah, so, well, that's kind of what they did with the investment properties, and they did this bright lines test, which is like you have to own the property for a certain number of years, otherwise you have to pay tax.
Ooh, so what is that? I need to know that.
Yeah, so it's changed recently, but there is a certain number of years. Yeah, otherwise you pay tax.
Oh no, that's right, because I think it's 2 years.
Is it 2 years? Yeah,
because otherwise then people will just be buying, flipping. Yeah, that's right.
So there is, you do have to be aware of that. But yeah, so we've got a really supportive tax environment for property. We've also got low interest rates. I know a lot of countries around the world do, but this plays into demand as well. We've got interest rates that are falling, which we know is like a seesaw. If you've got high interest rates, property prices are low. Flip the seesaw the other way. If you've got low interest rates, you've got high property prices. That's how the world works.
Is it not the other way around?
It's so high interest rates, low property prices. Low interest rates, high property prices. Either way, when you buy a house.
because right now we've got high property interest
they're
rates.
falling, so that the seesaw is kind of starting to come down, and house prices are starting to go back up. And I mean, our economy hasn't been too great, but that also plays into the demand. So if you've got really strong economy, you've got low interest rates, and you've got really supportive kind of tax environment for property, that's like the demand side. So property prices are going to go up. And then supply, I mean, we can't build enough houses to save ourselves right now in New Zealand. We've got people coming in here to live, and we can't build enough property to support that. So, and that's a function of the fact that we've got quite a monopoly in terms of there's one company that kind of dominates the construction industry here
Who's
in New
that?
Zealand, Fletcher Building.
That's it.
So, building prices is ridiculous and through the roof. They kind of control a lot of the market here. So,
Do we need a new Fletcher?
yep,
Hmm.
ASAP. Yeah. And also just getting staff, getting builders, getting tradies has been really, really hard
You reckon
post-COVID.
Fletcher's quite a fun name to say.
Yeah,
Fletcher.
Fletcher.
Like it's quite like lots of things happening in your mouth.
Fletcher.
You're really trying, I can feel that you're trying to get through your research here that you've done.
Well, I'm just trying to say, overall, with any investment, it's like, what is going to make this asset increase in value and the price of it go up? And it's more demand for it. But if you're looking at buying in a neighborhood where they've got like 100 new apartment buildings going up and
That's a good
you're buying an
point.
apartment in that neighborhood, that increases supply.
So demand would be lower.
So demand will be lower. Well, supply will be increasing. So prices aren't going to go up as much because you've got all these apartments that people can now choose from. So it's like,
That's a really good point.
yeah, it's like that's kind of plays into it as well. So it's just something to be aware of when you're buying an investment property, because with any investment property, you're buying because you want to create money and you want to create value. Residential, a bit different, but yeah. So this is kind of why it's really important to think of all these things when you're buying property for an investment.
Because I was going to say, I feel like we could go into that so much more.
Yeah.
And I know that was our plan. And I'm sorry, I feel like I really derailed this whole conversation a little bit. But
No, I thought it was interesting. Whether other people do, I don't know.
yeah,
but-
please give us feedback. But this is the thing, right? Like we sort of planned to go and have this conversation and I'm looking at all of the stuff that we were wanting to talk about and we haven't got to it. So this is kind of just further to the point that we have a lot of property conversations that we need to
it's
keep
a whole
having.
asset class. And we've been talking about investing in stocks for years.
Yeah.
And then
Bob
we're
off the
trying to
stock
like
market.
quickly do the whole other asset class in 40 minutes. So yeah.
No wonder we're rushing to get through
Yeah.
it. I mean, we'll come back with some more updates. I think I
Yes.
can't tell you when, but we will be doing it soon. If there's any particular topics when it comes to investing in property that you'd love us to cover, can you comment on this podcast wherever you're listening? Because it would be really good to add them to our list. We currently have 10 episodes to get through, Vic.
Yeah. We'll be speaking.
like-
Let's talk about the pros of investing in property.
It's
Now
quite-
let's talk about the cons. Every episode will be like one pro.
But do you know what I think is quite fun about this is that we've got a whole lot of stuff to talk about. And all of a sudden, from a selfish perspective, I'm very interested in
Very
property.
interested. So if there are any interior designers that are listening,
Yeah, get in touch. You know, I'm looking for a painter, a roofer. Imagine me. Now we've got someone who's doing my carpet on the podcast.
yeah. What's the best thing to look for when putting carpet in? God, snooze fest.
I'm really hoping I do have an exciting update though.
Yeah.
You know, like how long?
I can't wait to see the house you buy.
I know.
You know how
same.
people say that your dog is like a reflection of its owner? I think
Oh,
houses
don't say
are.
that because I can't afford much. So then you will look
No.
at my house and we'll be like, "Yep, makes sense."
No, but I feel like
Tragic
it'll
rundown
be.
mess over here.
I feel like it'll be like really cute and light and
Oh, that we think of me
in a bush somewhere.
as a giant bush.
I mean, like
We all know
foliage.
what you
Yeah,
mean.
yeah, yeah,
We
yeah.
all know what you mean.
Yeah.
It's so funny.
Okay.
Bye.
Bye.
This conversation was brought to you proudly by Trade Me Property, a partnership that we are super, super proud and excited about, to be honest. And look, who knows how long this is going to go on for, because we're not quite sure what's happening with my pre-approval. Will it happen? Won't it happen? TBC, we'll come back to that. But yeah, thank you so much to Trade Me for allowing us to have these conversations. And you know what? Whether you are looking for property now or maybe in the future, Trade Me have absolutely, without a doubt, hands down, the most properties than anywhere else. So if you want to do a little dream scroll, have a look and see what's available, then I would highly recommend jumping on. We will come back with part 2 of this conversation next Friday. So let's just hope there's some exciting updates. But in the meantime, have a look at Trade Me. Okay, quickly, The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.